Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, August the 10th. The Dow Jones Industrial Average fell more than 200 points earlier this morning amid a widespread sell-off in global stocks as the Turkish lira tumbled due to concerns over the country's economy and a deepening rift with the United States. President Donald Trump doubled tariffs on aluminum and steel imports from Turkey, deepening the currency's losses and raising concerns that the crisis could weigh on other economies. Investors fled to safe haven assets, with the dollar rising to a 13-month high and U.S. bond yields slipping to a 3-week low. 10 of the 11 major S&P sectors are lower at the moment, with bank stocks taking the biggest hit. And on that cheerful note, let's look at 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our S&P 500 index. Now we know, but today this is a more important number than usual. We know that on January 26th of this year, the SPY made an all-time closing high of $286.58. Since then, we know we had a pretty wild time of it in January and February with the downtrend that was, again, pretty rowdy, coming down to the 200-day moving average several times, and then finally starting in an uptrend in April and May, and rising in a very nice uptrend, I might add. Now, on Tuesday of this week, the SPY again closed at $286.58 right here on that day. Isn't that interesting? To the penny, the same closing as the all-time high in January, so that's pretty cool. Now, that didn't last too long because today the SPY gapped down to open at $283.42 on that news we just talked about concerning Turkey. So it did gap down this morning. It's been trading in a really kind of a narrow range ever since. And when I captured this chart today, the SPY was trading at $283.80. Just above its 20-day moving average, the red line at $282.19. Now that could provide some short-term support, but that's just potential support here for the SPY. We also have nearby price support here at the 50-day moving average at 278 and 279 right in here, with, of course, a little more price support at 280, which would be 2,800 on the S&P 500 itself. So that's a pretty important, right from 280 to 278. This is a pretty important potential support zone for the SPY should it need to continue lower. Now that the main part of earnings season is slowing down, we're going to see in the coming weeks if geopolitical events and the global economy moves into the spotlight, taking over all the news we've been learning through the earnings season, and we'll see whether that the global economics or the global politics can move the SPY higher or if it takes it lower. As well, it's good to remember that August can be a soft period for the market. And typically, the market can lose some energy in August. So while that's not always true, it is some of the time. I know I can think back over the last 20-some years I've been doing this, and I can't remember how many times I've said the August lows, the August lows. So we'll see, but that may not happen this year. So keep an eye on this benchmark and see if it can remain in this current uptrend by staying above at least 276 dollars or 2760 on the S&P 500 itself. That would keep it in this uptrend that it's currently in, should it have to pull back here to the 50-day or to this lower trend line. Of course, it would be great if it can bounce back up and make even newer higher highs. We'll have to wait and see. Our second chart we're going to look at today is the PowerShares QQQ. As you all know, the QQQ represents the NASDAQ 100, a very important index in the market. And as you know, the moves of the QQQ, the biggest components, are the FANG stocks like Amazon, Apple, Microsoft, Intel, Facebook, of course, Netflix, that whole group, Google, of course. Now, we know that the QQQ is also trading in an uptrend from its rambunctious beginnings the first of the year, but it took off as well in April and May, a little stronger than the S&P did. It outperformed the S&P, making a steeper uptrend here than the S&P did because the FANG stocks have been so very, very strong this year. As you can see in this uptrend, I've drawn this lower trend line, and the 50-day moving average is moving right along with it, really making a nice support line and doubling up potential support with the 50-day moving average, which is coming in at 176.81. Now, when I captured this chart today, the QQQ also gapped down, was trading at $181, again, as well just above the 20-day moving average, which is coming in at 179.70 and could provide some potential support. But I think the strongest zone of support right here, potentially, is the 176, 177 area, where both the 50-day and the uptrend line come in together. Now, as you can see, the last high that the QQQ made, it was unable to come up to move above this last high the Q's made. It was unable to come back up and hit the top of this channel line as we want uptrends to do. Now, maybe the QQQ has to come down here. Maybe in the coming week, as you see, volume is getting much lower. That's very typical in August, and one reason August can get soft, as I said earlier. So we'll have to see if the QQQ needs to come back down, especially with these geopolitical events going on, to the 176 zone, or if it can stay in between these channel lines and keep moving higher. That would be fantastic, but we'll have to see what comes to pass. Next week, I think, will be a very important week in the market for direction. Now, let's move on here to look at our final long chart for the day. This is a daily chart of the SPDR S&P Retail ETF, symbol XRT. It has 89 holdings in it. Some of the top holdings are Amazon, SuperValu, Kroger, Carvana, and Wayfair. Now, it made an all-time high that you can't see on this chart of $51.24 in March of 2015. Today, when I captured this chart, the XRT was trading at $51.28. So it's just coming up now to try to overcome the all-time high and head into blue sky territory. Of course, in a few weeks, we'll be heading into fall and the holidays. So for the retail ETF, that could provide some buying momentum. As well, this can be one way to get exposure to the stock Amazon, if you like it, without having to purchase that stock that's currently trading at about $1,855 per share. This is one way to do it. So I will see in the coming week if the XRT, and as you see, this has been moving in a nice uptrend since March. We know at the first of the year, a lot of these retail stocks got Amazoned, and this was kind of the result of getting Amazoned. And now, though, in March, the XRT started back up. Of course, Amazon's in it, but it has many other stocks as well, 88 more stocks. So we'll see if, with the help of Amazon and the strong retail results we've been seeing, if the XRT can remain strong and continue to trade above the 50-day moving average, coming in at $49.59. Again, today, when I captured this chart, the XRT was trading at $51.28. So in the coming week, if the XRT can remain strong and continue to trade above this rising 50-day moving average and in the uptrend it's currently in, I may purchase shares, and as usual, I will establish my initial protective stop as a close below the 50-day moving average. Okay, with that said, now on to the coming week's economic reports. But first, please join us this coming Monday, August 13th, for our next session of Tony's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. Besides, we have a really good time, so please join us. For those who cannot attend our live session, no problem. The recording of our session is available just a few minutes after the session ends to all of our members. For more information and to join, go to tonysmarketclub.com. And now, for the coming week's economic reports, not much going on Monday and Tuesday. We still have a little left over of earnings season. On Wednesday, we have the Empire Manufacturing Report and our usual crude inventories. On Thursday, we have building permits, housing starts, the Philly Fed, our usual jobless claims, and usual nat gas inventories, and not much going on the economic front on Friday. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.